Danaos Corporation is one of the largest independent owners of modern large-size container ships. Currently, they own 71 container vessels and they are building 6 more ships that will be in service by 2024. They charter these container ships on long-term contracts to many of the world's largest liner companies, including ZIM Integrated Shipping Services, on which I made a video and you can find it in the description below. And after that video, I got some requests from you to also analyze Danaos, which not only supplies some of the container ships to ZIM, but also owns a substantial part of ZIM shares. Or actually, it used to own the shares of ZIM, because in April 2022, they sold 1.5 million shares worth around $85 million. And in the last earnings report, we found out that in September 2022, they sold all remaining 5.6 million shares of ZIM worth approximately $161 million. So let's take a look at their recent earnings, analyze the company, and find the intrinsic value of Danaos. Let's start with the Q3 earnings. Revenue in the last 9 months is up by over 56%, but at the same time net income is down over 54%. So where did the money go? Well, if we take a look at gain-loss on investments, we see a difference from over $500 million in gains to almost 11 million in losses. We should also notice the debt. If we look at the long-term debt, we can see that it went down from over $1 billion to just around $775 million. And the last thing I found very interesting in these results is the cash and cash equivalents, which went up from $93 million to $569 million. So even though earnings are substantially down, the other main areas look very nice. So now let's take a look at the big picture and analyze this company. First, let's find out who owns Danaos. Individual insiders, that is a check. It is an incredible 46.4%. We are looking for a number higher than 2%, and that gives us enough conviction that the management will think about the shareholders because they are the shareholders. But in this case, it is a completely different game. John Kostas, who is a chairman of the company, owns 44.5% of it. So in this case, we know that he will run it the best he can because it is almost like a private company for him. So that is a massive check. And are insiders buying? That is an X. We do not see any movement from individual insiders. And super investors? That is also an X. No super investor owns shares of Danaos. So, of course, they are also not buying in the recent months. Now, let's take a look at the financial health of Danaos. Return on invested capital, that is an X. It is 1.9% in the last 10 years, and we are looking for a return of over 10%, so that is not good. And what about free cash flow growth? That is a check. It is 15% in the last 9 years, but it was not a smooth ride through the years. From 2009 till 2012, it was negative, and after that, it was going up and down quite substantially. Net profit margin, that is a check. It is 59.9%, and its peers have margins of around 45%. So we see that it is a very profitable business and that Danaos has a really strong position in this sector. And what is happening with shares buyback? That is an X. They issued 159% more shares in the last 10 years. They went from around 8 million to over 20 million shares. They have a $100 million repurchase program, but let's be honest, it is nothing in the long run. So they are diluting their investors in an extremely big way. And what is happening with that? That is an X. It would take over 3 years to pay their debt with a current free cash flow. But if we look at the debt in a long run, we can see some interesting patterns. It is steadily going down for years. In 2015, it was $2.7 billion, and right now it is below 800 million. So the trend is very positive. And is Danaos paying a dividend? Yes, it is. Dividend yield is 5.1%. And the payout ratio, that is an X, it is 8.9%. And if you want to concentrate your investment on dividends, then the payout ratio between 30 and 50% is what you should be looking for. But we have to remember that if the payout ratio is lower, that leaves more money for the company to invest in its growth or pay back debt. So if the cash can be allocated in a smart way, then it may be a better solution in the long run than paying dividends. And the dividend growth, that is an X. They were paying dividends in 2007 and 2008, and then they stopped. And again in 2021 and 2022, they are paying dividends. So we have too little data. We should have at least 5 years of data to really know if it is growing and have some chance of forecasting what will happen with dividends in the future. Okay, so it's time to value Danaos and see, is it a good investment at a current price? The recent free cash flow is very high compared to the last 5 years. So we will use for this discounted cash flow calculation an average 5-year free cash flow. If we average things out when valuing cyclical businesses and we look at the long time horizon, like 10 years, it should give us a more representative value. So we will have to forecast the growth rate for the next 10 years, and we will make 3 scenarios of this growth. Now, revenue growth for the last 10 years was around 2%, and analysts are everywhere between -5% to 9%. So for the low scenario, we will estimate the growth rate at -5% for the first 5 years and then -2%. For the medium scenario, we can expect no growth for the entire 10 years. And in the high scenario, a growth of 2% and then 4%. And the intrinsic value is $89 in the low scenario, 120 in the medium, and 148 in the high one. But these are not the prices we should be looking for. We always have to add a margin of safety. I use a 30% one. And with such a margin, we get $62 in the low scenario, 84 in the medium, and 104 in the high one. And the current price is $59.05. So even with a negative growth for the next 10 years, it looks like an interesting price. It is inexpensive when we calculate the intrinsic value with a 5-year average free cash flow. But we have to remember that their free cash flow history is very bumpy, just as the revenue or earnings per share for that matter. They were all over the place in the last 10 years. So even if it's cheap and in some periods it has incredible results, we do have to take into consideration the fact that it is a cyclical business and not a slow compounder that grows steadily every year. So if you are considering investing in Danaos, then remember to do your own due diligence and treat our analysis only as the first step in understanding this company. If you found this video helpful, then please leave a like and subscribe to the channel if you want to see more videos like this one. Thanks for watching and see you in the next one. Bye bye.